Ever wondered how millionaires and billionaires make millions of dollars every year and still pay less tax than the average employee? Sounds unfair, right? Well, here's the truth. Most of it is 100% legal. Today, we're diving deep into the strategies the rich use to legally reduce their tax bills and how some of these might even help you. Let's get started. The magic of capital gains. Most people earn money through salaries, and salaries get taxed at the highest rates. But rich people? They make money through investments, like stocks, real estate, and businesses. These profits are called capital gains, and they're often taxed at a lower rate than regular income. If you make $100,000 as a salary, you could pay around 24 to 30% in federal tax. But if you made $100,000 by selling stocks you held for over a year, you might only pay 15 to 20% in taxes. That's a huge difference. Real estate and depreciation tricks. Next up, real estate. Rich people love real estate, not just for cash flow, but for depreciation. Even if a property increases in value, the government allows you to claim that it's wearing out. That's called depreciation, and you can subtract that from your taxable income. Imagine you earn $50,000 from rental income, but you write off $30,000 in depreciation. Now you're only taxed on $20,000, even though you made more. Oh, and when they sell the property, they use a little thing called a 1031 exchange, which lets them roll the profits into another property without paying taxes right away. Start a business and deduct everything. Rich people don't just work for money, they build businesses. Why? Because owning a business lets you write off expenses. Business trip? Write it off. Your phone bill? If used for work, write it off. That new car? If used for your business, write it off. And these deductions reduce the amount of income they actually have to pay taxes on. Use of trusts and foundations. This one's next level. The ultra-rich often use trusts and foundations. A trust lets you transfer wealth to your family or heirs while possibly avoiding estate taxes. And a foundation? It's a legal way to donate money, lower your tax bill, and still keep control over where that money goes. Billionaires like Bill Gates and Warren Buffett donate billions through their foundations and get major tax breaks.
We don't mind paying taxes at Berkshire, and we are paying a 21% federal rate. If we send in a check like we did last year, we send in over $5 billion to the U.S. federal government. And if 800 other companies had done the same thing, no other person in the United States would have had to pay a dime of.
And a grifter doesn't pay taxes, basically. And I'm literally paying the most tax that any individual in history has ever paid this year, ever. And she doesn't pay taxes.
In the process. Offshore accounts and tax havens, but legal ones. Now let's bust a myth. Not all offshore accounts are shady. Some rich individuals set up legal offshore entities in countries with lower taxes, like Ireland, Singapore, or the Cayman Islands. As long as they report it to the IRS or their country's tax authority, it's completely legal. Big companies like Apple and Google have saved billions this way. So, are rich people cheating the system? Technically, no. They're just playing by a different set of rules, rules that are written into the tax code itself. The government actually encourages this behavior to promote investing, building businesses, and creating jobs. Now here's the key takeaway. You don't need to be a millionaire to use some of these tactics. Start learning about investing. Maybe start a small business or look into rental property. Small steps today can lead to big savings tomorrow. If you learned something new today, smash that like button. Subscribe for more smart money videos. And let me know in the comments which of these strategies surprised you the most. Until next time, keep learning, keep growing.